Hey guys, what is going on? Welcome to the video. So we continue to see major volatility in the stock market this week, and in this video we'll be going over what played out and what to expect next, what needs to happen for continued downside for the market, or what needs to happen for the market to bottom and reverse. Also going over what to watch for next in Bitcoin and the top 3 trade ideas that I'm watching for the month of March and stocks that I'm interested in dip buying. As always, there are timestamps in the description. Let's go ahead and get into it. So starting out by taking a look at the S&P futures chart, last week was a very volatile one. So we've gone over how 60-10 to 60-20 has been the major pivot zone, and it needed to reclaim and hold back above that zone for upside, and if not, the market was set up for continued downside. It tested as resistance multiple times and failed to break early in the week, and then built out a consolidation range between there and 59.35 as support. On Thursday, this range broke to the downside, which triggered a sell down to 58.60 next, where it found support. And Friday's price action was important, as it spent most of the day consolidating between 58.60 support and 59.14 resistance. In the afternoon, it had a failed breakdown below 58.60, where it found support at 58.48 before reclaiming back above it, triggering the false breakdown. And from there, it rallied back to 59.14, which broke out of the intraday range, and then also broke back above 59.35. Which was the bottom of that previous consolidation range, and this then triggered that short squeeze move to end the week. So now into next week, since it reclaimed back above 59.35, that now becomes key support to hold to keep direct upside in play. If it is able to successfully hold above it, upside is open back to 60-10 to 60-20, which is of course major resistance once again, and would be the larger upside trigger on a break above there. If it fails back below 59.35 though, this puts the market at risk of another sell. Breaking below there can target 59.14 and then 58.48 to 58.60 before new lows if that was to break. So overall, I would continue to lean slightly bearish on the market into next week unless it is able to successfully reclaim back above 60.10 to 60.20. I would definitely expect the high volatility to continue and to just focus on price action around these key pivot levels, so 60.10 to 60.20 on the upside and 59.35 on the downside, which if that is broken and held below, it puts the market at risk of another sell once again. So now taking a look at Bitcoin, and for months we had been going over the large consolidation that it had set up, where the bottom of the range and the breakdown trigger was at 90,750 to 92,000, and it finally got the break this week, which was triggered below 90,750, and as expected it was met with a violent sell lower. This sold all the way down to 78,000 at the lows for the week before getting a decent relief bounce on Friday back to the mid 80,000s. So into next week, the breakdown is intact and sellers are in control of the trend until 90,750 to 92,000 is reclaimed. If it breaks back above that zone, it would trigger the false breakdown and likely see a violent move higher if so. For now though, the downside move may not be done just yet, so the major supports that I'd be watching on the downside are at 77,000 and then 72,000 to 73,800, which was the top of the previous long-term range and breakout point from the election in November. And those would be the biggest levels of interest for a blind dip buy if it was to get tested. So now getting some trade ideas for the week and month ahead. Tesla stock, ticker symbol TSLA, should be on close watch as it is at a major decision point. So a few weeks ago, we went over the setup at the 358.35 to 361.5 key pivot and went over how it needed to break back above there for upside, or it would set up to see continued downside if it failed to reclaim back above there. And it failed to do so and saw a large sell lower in result and made it all the way down to the 265 to 279.2 zone, which was the breakout point from November and the election. Along with this, that zone also aligns with the 200-day moving average, which is currently at 278.75, and so far it held on Friday with a decent relief bounce and is testing that first zone above as resistance at 294 to 300. So this is a key spot, and if it is able to reclaim back above 300, it can see a larger relief rally. The next target levels above there would be at 314.15, 324, and 335. For the bigger bear case, a break below the 200-day moving average and the 265 to 279.2 zone would trigger the larger breakdown and likely result in a move to the low 200s next. Overall though, I like the odds of a larger rally higher first in my opinion. Robinhood, ticker symbol HOOD, is another that I'm keeping on close watch during this market pullback. So last week it found support off the previous range breakout trigger from January at 43.35 to 43.87 after its large pullback, and it was able to reclaim and hold back above the 50-day moving average and now acting as new support so far, which is currently at 47.67. Overall, this is going to be one of my favorite names to accumulate on dips, as I believe the company is set up super well moving forward, and some very smart people that I know think this company is on its way to becoming a financial giant in the future. So for the short term, support levels are at the 50-day moving average, 45.91 and 43.35 to 43.87. And as long as it holds above there, a larger rally stays in play for the stock, with next upside targets above at 55.13 and 57.3. If there is continued downside and volatility from the market, it will be important to watch how this holds up. If it shows relative strength, that would be a big tell that this stock can move much higher once this market pullback does end. And Amazon, ticker symbol AMZN, is another that I'm keeping on close watch during this market pullback. And similar to Robinhood, this will be one of my favorites to accumulate long term on dips like this, as this is the hardest mega cap stock to make any type of mid to long term bear case on, in my opinion. So the key support levels to watch are at 204 to 206, which is where it held last week, and then 195 to 200, which was its large breakout trigger from November, and that also lines up with the 200-day moving average, which is currently at 198.6. That zone would be the biggest area of interest for a more aggressive dip buy if it does get there. And resistances to watch on the upside are at 215.9 and then 220. A break back above 220 would be the trigger to open larger upside, and a good chance that the bottom is in if that level was to reclaim and hold back above as new support. So that is everything that I'm watching for in the week ahead. Thank you guys for watching. As we know, volatility results in opportunity, so there should be some great opportunities coming up very soon. Thank you guys for watching. If you're anybody interested in joining the private Discord chat, that is the first link down in the description below. You can have personal trade alerts, nightly watch lists, and answer any questions you guys have in there. And I will catch you all next time. Good luck trading in the week ahead, and peace out.